Let's see cost sheet, a format of cost sheet, right? Now, what is meant by cost sheet, right? So cost is nothing but statement showing how much the cost has been for each and everything. For example, what is material cost, what is labor cost, what is other expenses, overheads. So it's a statement designed to show the output of a particular accounting period with a breakup cost. What is material cost? What is labor cost? What is office expenses? What is direct expenses? What is selling expenses? What is factory expenses? So you can segregate, breakup value. It's called cost sheet. Okay. So what are the data we include a cost sheet? It is going to be useful for various statement of accounts. Okay. So based on the cost sheet only, we come to know what is the exact cost for a product. So but definitely in the cost accounting department, organization, the large corporates, they will maintain cost sheet separately. Okay, right. So and finally, everything has to be written in the cost accounts. Even day to day or regular periods, you have to maintain the cost accounts. That's it. It is a primary duty to prepare cost sheet. But there is no fixed form for cost sheet, but just an idea I can give it to you. So this is the cost sheet. I can give an idea. That's it. Okay. So cost sheet, right? So there is no fixed form, but we can give some rough form. That's it. Some idea we can give it to you. What is total cost? What per unit cost? What is fixed cost? What is variable cost? Some idea we can throw. That's it. So that the management can able to get an idea how much cost is involved. So what is the advantage of cost sheet? So the main advantage cost sheet discloses total cost of the product. For example, I'm having a mouse. What is the total cost for the mouse? We can find out. I'm producing 1 lakh units in a month. But what is per unit cost for the mouse? We can find out. In a given period, what is the unit you produced? What is per unit cost? Number one question. Number two, it enables the manufacturer to keep a close watch and control over the cost of production. So I can closely monitor why the cost has been increased. I can monitor. I can control over the cost of production. That's it. Similarly, I can able to compare the current cost with the past. So today, the cost of the mouse is going to be 150. Last year, 120. Why there is an increase in the cost per unit? I have to identify. Maybe material may be increased, or labor may be increased, labor cost may be increased, or overhead expense may be increased. So I have to compare the past cost with the current cost and the standard cost. For every unit, I have a standard cost. 100 rupees is a standard cost, but 120 incurred. Why? What reasons? Why it is increased? Material increased, labor increased. Why it is increased? Is there any shortage of labor or extra amount you paid or any wastage of material? Why it is happening extra? We have to compare. Our standard cost, current cost, we can able to compare. That's it. Why there is a variation? Why material cost is increases now? Why labor cost is increases? What factors just increases? That's it. We can check it out. It acts as a guide to the manufacturer. And helping in formulating a definite useful production policy. That's it. It acts as a guide to the manufacturer. Just give an idea how he is going to use it. He helps in fixing of the selling price more accurately. So by using this, we can able to fix the selling price more accurately. He helps the businessman to minimize the cost of production. So once you know the cost sheet properly, automatically you can minimize the cost price, minimize the cost, maximize the profit, minimize the cost, maximize the profit. Because in a cutthroat competition, it is always ideal for the institutions or corporates to reduce the cost. You have to do at the least cost, maximum profit you have to get. He allows the business to submit the quotation with a reasonable degree of accuracy against the tenders for supply of goods. That's it. Even for quotation for anything, for these things, no. Based on the cost only, quotation can be given. So suppose you're going to take a project, okay, of a quotation to be given. Once you know the cost, then only the quotation can be given. Even for quotation kind of things, no, unit cost. That's it. So these are the things not to be included in cost sheet because they are purely financial accounts item. They are purely financial account items. Financial accounts items. So they are not supposed to be included in cost sheet. They are not supposed to include in cost sheet. Number one, income tax not to be included in cost sheet because it is a financial accounts. It's a financial accounts item. Dividend to shareholders, accounts item. Dividend to shareholders. Similarly, shares and debentures to be redeemed extra amount, accounts item. So capital losses, machinery sold, loss happening, transfer to P&L account, capital losses, accounts item. It's not a cost sheet item. Interest on loan paid, interest on debenture paid, cost sheet item. Donations given, interest on loan, accounts item, not a cost sheet item. Donations, accounts item. So capital expenditure, or means asset, okay, asset item, accounts item, not a cost sheet item, Discount of shares and debenture, accounts item, not a cost sheet item. Commission given to managing director, Company accounts related. Underwriting commission given to underwriters. Whenever public money we are receiving below 90%, automatically the balance amount we have to get it from the underwriters only. So for them we have to give underwriting commission. Anyways, purely is going to be incorporation related to Companies Act, underwriting commission, accounts item. Goodwill to be written off over a period of time, or any incorporated expense with proprietor to be written off by the company over a period of time. They are all accounts item, not a cost sheet item. Any provision for bad debts, accounts item, not a cost sheet item. But generally there is an idea available. So bad debts sometimes can be treated as selling overheads. Some people think, there are some people think no, bad is not a after sales only happening. It is not a accounts, it is not a cost item. It is going to be accounts item. There are some people. So some opinions they differ. But anyway, for the sake of convenience, you treat bad debts as a accounts item, right? Any amount transferred to general as a accounts item. Security premium, accounts item. Internal capital, accounts item. The proprietor drawings, accounts item. All drawings by the proprietor, accounts item. So they are all accounts item. They are all accounts item. That's it. They are all accounts item. That's it. Okay. So they are not part of cost sheet. They are all accounts item. That's it. Let's see. Before we proceed, I tell you the rough balance sheet, rough cost sheet for understanding point of view. Right. So this is cost sheet. This is cost sheet. Breakup with breakup. First, number one, direct material consumed. Direct material consumed. So what is direct material consumed? Direct material consumed. Direct material consumed is nothing but opening raw material. Direct material consumed. So actually, I have a mouse. This is output, finished goods. Before the finished goods came out, but I have to procure materials. No. Okay. So direct material consumed. Number one, it is called opening raw material plus purchase raw material plus carriage inward raw material. Lorry you have to pay for carriage inward raw material. Okay. Minus closing raw material, or means raw material, minus sale of scrap of raw material. Sale of scrap of raw material. That's it. Normal loss. Sometimes while bringing the material, some scrap is happening. That scrap can be sold. From the cost, you have to reduce it. It's a normal loss. You cannot prevent it. So any material you brought in, sometimes scrap will be happening. The scrap can be sold. Revenue. This is cost, this is revenue. That's it. So balance opening raw material plus purchase raw material plus carriage in raw material minus closing raw material minus sale of scrap raw material, normal loss, balance direct material consumed. Direct material consumed. This answer. Number two, direct labor. Number two, direct labor. What is direct labor? Before we production, whatever the expenses incurred is called direct labor. Direct labor. So we can able to trace what is direct labor. Indirect cannot be traced, but direct can be traceable. That's direct labor. So how much you paid for the labor cost, salary or wages, direct wages paid. How much you paid? How much outstanding? Please add. Is there any prepaid available? Please subtract. Balance is called direct labor. Direct labor paid, direct labor outstanding minus prepaid. Balance you can show it here. That's it. So paid plus outstanding minus prepaid. Number three, direct expenses. Number three, direct expenses. Direct expenses. That is also paid plus outstanding minus prepaid. What is direct expenses? Example, royalty and production. Your formula I'm using. Well, okay, as long as I'm producing your formula, I'm giving royalty to you on production units. So royalty on production units, royalty on production units. Or sometimes I don't have a machine to produce it. I can hire machine. That hiring charges, rental, that hiring charges on machine, rental charge machine, that is also. Or hiring charges on machine. That is also hiring charges on machine. Hiring charges on machine. So that is also direct expenses. Direct expenses. Direct expenses, one more name, chargeable expense we can say. We can say chargeable expense also. Chargeable expenses. So chargeable expenses. Direct expenses or chargeable expenses. Add these three. 1, 2, 3. What is one? Direct material consumed. One mark here. Opening raw material plus purchase raw material plus lorry charges on raw material, carriage inward minus closing raw material minus sale of scrap of raw material. Normal loss. 1. Direct labor. Paid plus outstanding minus prepaid. Number 3, direct expenses. Royalty and production, hiring charge machine, paid plus outstanding minus prepaid or chargeable expenses. The direct material consumed, direct labor plus direct expenses. All three if you are adding, you will be getting the term is called prime cost. If you are adding 1 plus 2 plus 3, 1 consumed, 2 direct labor, 3 prime cost, 3 direct expense. Adding all three, 1, 2, 3 is called prime cost. One more name of prime cost is called direct cost. Direct cost. One more, direct cost, prime cost. Prime cost for the mouse. Prime cost for the mouse. Still material only. Okay, not going to production. Add all the factory overheads. All factory related expenses, please add. All factory related expenses, please add. They are called overheads. Overheads. Overheads is nothing but general notation OH. OH. Overheads means generally OH. Used to call OH notation. OH. Overheads. That's called aggregate of indirect material, indirect labor plus indirect expenses. So after once starting production onwards going to be indirect only. Factory related expenses, indirect. Office related expenses, indirect. Selling and distribution related expenses, indirect. So direct material, direct labor, direct expenses, prime cost. Indirect material, indirect labor, indirect expenses, overheads, overheads, overheads. So factory related overheads, please add all the factory related. Overheads means aggregate of one mark, aggregate of indirect material, indirect labor, indirect expenses. Add this. So prime cost plus factory overheads is equal to all the factory related, all expenses in factory overheads collectively called. So gross factory cost. So gross factory cost, right? So gross factory cost plus opening WIP. Sir, what is WIP, sir? Work in progress. Once the material brought in, procured, materials are coming to production, production work is going on, work is called work in progress. Add opening WIP, work in progress, opening WIP, less closing WIP. The closing WIP, opening WIP normally for a period, maybe weekend, a month, or some product, once the product completed normally. So today evening it closed, tomorrow morning is starting. So closing opening normally will be happening. Opening WIP minus closing work in progress, adjust. Amount will be given, adjust. This is a format. Opening WIP minus closing work in progress, please adjust. Gross factory cost, one more name, gross work cost. One more name, gross work cost. Plus opening WIP minus closing WIP. What is WIP? Work in progress. The answer, net factory cost. The answer, net factory cost or net work cost. So gross factory cost plus opening WIP minus closing WIP is called net factory cost. Overheads are different, costs are different. Net factory cost or net work cost. So plus office and administration overheads, all office related expenses, all administration expenses, please add. The answer is called so cost of production. The answer is called cost of production, COP, cost of production, COP, cost of production. From the cost of production, add opening FG, opening finished goods, minus so closing finished goods. So what is finished goods, sir? Mouse ready. This is output. Finished goods. For the material, WIP, work in progress. Now mouse coming out. Output. How many opening FG? 100 output. Closing 300 output. Balance. Opening finished goods. So closing finished goods. If you adjusted, the result is called. So cost of goods sold. COGS. The answer is called cost of goods sold. COGS. So cost of production plus opening FG minus closing FG is equal to cost of goods sold, COGS. The cost of goods sold, add selling and distribution overheads. All selling related expenses, distribution related expenses, please add. You'll be getting the term, it is called cost of sale. And the cost of sale, please add profit. You'll be getting sale. This is called cost sheet. Right? Suppose cost of sale 80. Example, I'm telling you. So profit 20. What is the sale? 100. So example, I'm telling example. Suppose profit is equal to 20 rupees. That is equal to 25% of 80. Please check it out. 25% of 80. Profit equal to 20. That is equal to 25% of 80. What is 80? So 25% of cost. Please check it out. Or 20% of sales. Please check it out. 20%, that is 20% of sales. So 20% of 100. Please take it out. That is also 20. So 20% of sales. That is also 20. So cost into 20% or sales into 20%. That's called profit. It's called profit. So cost into 20%, sales into 20%. It's called profit. Right. So therefore, profit is equal to so 25% of cost or 20% of sales. Both are same. So 25% of cost, same 20 rupees, 18, 20%, or 20% of sales, 120. That is also 20 rupees. Both are same only, no. Therefore, 1/4 of cost is equal to 1/5 of sale. 1/4 of cost is equal to 1/5 of sale. So profit is equal to 1/4 of cost. That is equal to 1/5 of sale. How is it possible, sir? This example. 1 plus 4, 5. 5 minus 1, 4. 5 minus 1, 4. 1 plus 4, 5. That's it. So again, some more example. Sir, 1/3 of cost. Then 1/4 of sale. Some more example. 1/2 of cost. 1 plus 2, 3. 1/3 of sale. Similarly, profit. 1/7 of cost. 1/8 of sale. 1/8 of sale. Sir, how is it, sir? 1 plus 7, 8. Similarly, profit. 15% of cost. 15% of cost. So then sale. 15 by 1/5 of sale. 1/5 of sale. How is it, sir? 15 plus 100, 1/5. 1/5 of sale. So profit. Next. 2/5 of cost. Then, sir, 2 by 7th of sale. That's it. This idea, sometimes they'll be asking in the examination papers. So profit is equal to 25% of cost. They will asking you. So you have to do like this only. So 25% of cost means, please possible you cancel 1/4 of cost, which means 1/5 of sale. You please convert. Okay. Sometimes the profit will be, so 33 1/3% of sales they will give. Okay. They will give. So 33 1/3 of 100 is nothing but 1/3 of sale. Which means 1/2 of cost. That's the idea, exam point of view. That's it. Let's see. So already we have seen. Still we can go some little bit interior we can go. The format of cost sheet: direct material consumed, opening stock of raw material plus purchase of raw material plus carriage in raw material minus closing stock of raw material minus sale of scrap of raw material. Raw material. It is going to be normal loss. So the answer, direct material consumed. Okay. The direct wages, the direct expenses, prime cost. All the factories to be added. What is factories? All the expenses relevant for factory. Indirect material in the factory, loose tools in the factory, tools, spanner, hammer, just like this. Okay, loose tools, indirect wages, factory lighting, factory power, factory repair and maintenance, factory drawing expenses, R&D expense of factory, plant depreciation, insurance, plant insurance, factory building insurance, workman salary. They're all factories. What is overhead, sir? Overhead is nothing but aggregate of indirect material, indirect labor, indirect expenses. So prime cost plus factory cost, gross factory cost. From the gross factory cost. Okay, this is called gross factory cost. Okay. With this gross factory cost, if we adding opening WIP, work in progress, minus closing WIP, you will be getting net factory cost. From the net factory cost, you just add all office and administrative related expenses: office rent, office salary, office insurance, office building insurance, telephone charges for office, pending station for office, depreciation of furniture equipment, legal expenses, audit fees, bank charges. Please add. You will be getting cost of production. That's it. Next, with the cost of production, add opening finished goods minus closing finished goods. You will be getting cost of goods sold. The cost of production, add opening finished goods. Finished goods means completed, units complete. Opening finished goods minus closing finished goods is equal to cost of goods sold. Right. From the cost of goods sold, COGS, add all selling and distribution overheads. That's called showroom rent, showroom salary and commission, all sales related expenses, distribution related expenses, traveling expenses, sales department, printing and stationery, advertisement for sales department, postage, sales related, collection expenses, sales related, carriage outward, lorry charges on sales, depreciation on delivery van, sample and free gift. So they are all part of selling and distribution overheads. So cost of goods sold plus selling and distribution overheads is nothing but cost of sale. Cost of sale plus cost of sales plus profit is sales. Cost of sale minus loss is sales. So anyway, cost of sale profit is equal to sales. This is cost sheet. This is cost sheet. Right. Let's see one paper based on the cost sheet where we are going to post it. It's respective to factory or office or selling. You have to check it. So 2018 paper. Classify the following expenses and according to function. Factory overheads, office and admin overheads, selling and distribution. Where we can post. Number one, printing and stationery. Generally, printing and stationery, office also we need, sales also we need. It depends upon, but you can some assumption you can give. So printing stationery, nothing is given. Office related expenses. So printing station related to office and admin. Sales department also they need printing. Office also they need printing. Nothing is given. General expenses. General printing. Anything general printing means office and administrative overheads. That's okay. Next one, legal expenses. Generally, legal expenses are relevant for accounting line. But anyway, for this now you have to show is related to office and admin, office related, office overheads. Here also office generally. Nothing is given. You can take for office overheads. So legal expense also nothing is given. Office overheads. Right. Next one, showroom expense. Generally, showroom is related to sales only. Our sales related overheads, selling related overheads. That's it. Our showroom expenses, sales related overheads, selling distribution overheads. Fourth one, demonstration. Demo you have to show. If you want to sell your product, you have to show demo expenses. Any demonstration expenses, demo expenses is nothing but selling and distribution overheads only. So selling and distribution overheads. Right. Next, carriage inward, lorry charges on sales. So that is also related to selling overheads. Right. Next one, motive power. Generally power used in the factory. But this is nothing but factory related overheads. Motive power, factory rent, factory lighting, factory manager salary, drawing expenses. Okay, factory depreciation. They are all factory insurance building, premium paid on factory building, factory overheads. Power generally used in factory only, factory overheads. So audit fees generally related to office and administration overheads. Office and admin overheads. Audit fees. Office is generally related to office and administration overheads. Right. Next one, market research expenses generally related to selling and distribution overheads. Market research means whether the product can be sold in the market. We have to spend some money. Okay, selling and distribution overheads. So selling and distribution overheads. Technical director fees. Technical director office available only in the factory. Technical director, sales director, selling. General director, office. Technical director, factory. But it's related to factory overheads. Any selling technical director fees is related to factory overheads. Generally, middle will be handled only in factory. Any storekeeper available related to factory only. So okay. So middle handling with all is part of factory overheads. Next one, samples and gifts generally to attract the customer. So they are all related to selling overheads. Next one, storekeeper salary. Where is storekeeper generally will be allowed? Generally, storekeeper means office administration. Sometimes storekeeper will be available on the factory related also. We can say. Okay. So nothing is given. Storekeeper salary we can check office and administration. Factory also storekeeper. Sales department also storekeeper. But generally office. So you cannot specifically say stores only for office. Store 11 for factory also. Within factory there is a storekeeper. Office also storekeeper. Sales also storekeeper. But we may not know. So generally you can charge. But anyway, storekeeper may be on any place he can work. So nothing is given. Office administration overheads. Storekeeper, office administration overheads. Right. Next, cost of tender. That's related to office overheads. So tender cost, overhead cost, office and administration overheads. Tender cost. Tender we have to take for the cost involved. Right. So postage and telegram. Relevant for selling overheads. Generally. Office also postal telegram using. Okay. So generally sales means sales, otherwise office. Otherwise office. Otherwise office. You may not know, but you can give an idea also. Otherwise office. Otherwise office. Okay. Right. See, postal telegram also related to selling also. Selling also. Postal telegram also relevant for office also. You may not know. Either office or selling overheads or selling overheads. That's it. Okay. Right. Next. Loose tools damaged, written off only in the factory. Only in the factory. Loose tools always in the factory only. So factory overheads. Spanner, hammer, broken pieces, factory related. So factory related overheads. There's always overheads. Always factory related overheads. Catalog, pamphlets, advertisements, pamphlets. They're all part of advertisement. So therefore, they are selling related overheads. Cost of catalog. So catalog selling related overheads. That's it. So it's going to be 8 marks, 16 into off marks. 16 into off marks, 8 marks. So 2018 paper. That's it. 2018 paper. That's it. Okay. Let's see. From the following information, find out the purchases. Raw material consumed 26,500. Closing stock 4,500. Opening stock 3,000. Find the purchases. This is closing stock of raw material. This is closing stock of raw material. This is opening stock of raw material. This is raw material consumed. Find out the purchase of raw material. Find the question purchase of raw material. Right. So already we know cost sheet. First one. What is direct material consumed? Direct material consumed. So direct material consumed is equivalent to opening raw material plus purchase raw material, opening raw material plus, so purchase raw material plus, so carriage unit raw material minus closing raw material minus sale of scrap of raw material, it is going to be normal loss, right? That's a formula. Please memorize first part. So direct material consumed, raw material consumed 26,500 rupees given. Opening raw material 3,000 given. Plus purchase raw material. Sorry, sir. That is what you have to find out. So carriage inward. Sorry, sir. Not given. Nil. Not given. Nil. Minus closing raw material given, sir. 4,500. Sir, is there any sale of scrap, sir? Sorry. Not given. Sorry, not given. So minus sale of scrap, sir. Minus sale of scrap. Sorry, sir. Not given. Nil. Not given. Nil. Suppose pure mathematical skills. So purchase of raw material is equal to 3,000 minus 4,500 minus 1,500. 3,000 minus 4,500 minus 1,500 minus 1,000. Mathematics, pure mathematics hereafter. So 26,500 here. So 26,500 plus 1,500 is equal to purchase of raw material. That's it. So 26,500 plus 1,500, it's going to be so 28,000. It's going to be 28,000. It's going to be 28,000. That's it. It's going to be 28,000. That's it. Therefore, purchase of raw material is going to be 28,000. That's it. That's the first question. What is purchase of raw material? 28,000. That's it. Okay. Let's see. Prime cost rupees 33,500. Depreciation on factory. This is factory only. Factory rent 200% depreciation. What is factory cost? Assumption prime cost you move. Direct material, direct labor, direct expense, prime cost. Direct material, direct labor, direct expense, prime cost. So prime cost is 33,500. Prime cost is 33,500. Please check it out. Prime cost is so 33,500 rupees. So add factory related expenses. Add factory related, all factory related expenses, please add. All factory related overheads, please add. Factory related overheads. That is number one, depreciation. That is given 1,500. Plus number two, factory rent you have to pay. So factory rent, depreciation 1,500 into 200%. 1,500 into 200%. 1,500 into 200%. That's called 3,000. So please add 1,500 plus 3,000, 4,500. 1,500 depreciation, factory rent 200% of depreciation, 3,000. So 4,500 factory rates. Please add. So 33,500 plus 4,500. So 38,000. Rupees 38,000. So what do you mean by this, sir? What do you mean by this, sir? factory cost, factory cost. So it is called gross factory cost or simply factory cost. Simply factory cost or net factory cost, as the case may be. Any factory cost is going to be rupees 38,000. Let's see. Cost of sale, rupees 37,416. Advertisement expenses, 6,000. Selling related expenses. Discount on sales, selling related expenses. On advertisement expenses, 50% discount on sales. The question is cost of goods sold. You have to start from cost of goods sold. What is COGS, cost of goods sold? That is unknown. Plus selling and distribution overheads you have to add. Selling and distribution overheads you have to add. Then you'll be getting cost of sale. Then you'll be getting cost of sale. You'll be getting cost of sale. So what is cost of goods sold? Unknown. Cost of sales is known. Cost of sales 37416. 37416. Selling and distribution overheads. Advertisement expenses. Advertisement expenses. Go to the last part. COGS plus selling was cost of sale. Last part. Advertisement expenses. Advertisement expenses. 600. 600. Number two. Discount on sales. Discount on sales. Discount on sales. That is also part of selling and distribution overheads. Discount on sales. Some people used to say it's a selling overheads. Some people say no need to give any discount on sales. So two opinions available. Per year you can take assumption it's a part of selling overheads. 50% of advertising expenses. 600 is advertising expenses. 50%. 600 50% is going to be 300. 600 plus 300 900. 900. That's it. So 37416 minus 900. 37416 37416 minus 900. That is equal to 36516. 36516. So 37416 minus 900 36516 or 36516 plus 900 37416. Reverse working. What is reverse working? Bottom minus up is equal to up. 37416 minus 900 36516. Reverse working. 37516 minus 900 36516. Anyway, the question is only cost of goods sold. So cost of goods sold is equal to rupees 36516. Rupees. So 36516. That is equal to cost of goods sold. Cost of goods sold. That's it. Reverse working. Right. Let's see. Factory cost 3,95,000. Find the office and administration overhead expenses, which is 7.31% of factory cost. Right. So very simple sum. Factory cost is equal to rupees 3,95,000. Next, you have to find office and administration expenses. Office and admin overheads. That is equal to out of factory cost 7.315. So 3,95,000 is a factory cost. Into 7.315% is equal to office related expenses from factory cost. I'm using the cost sheet format. Office related expenses. That's it. 7.31% of 3,95,000. It is going to be so 28,894.25. So please check it out. So 3,95,000 into 7.315%. So 20,894.25. That's it. Please add. Factory cost plus office administration cost of production. Sorry, cost of production. So they're not asking you actually. It's a cost of production. Rupees. So 3,95,000 plus 28,094.25. 28,894.25. That is equal to 423,894.25. It's called cost of production. So 3,95,000 plus 20,094.25 is going to be 423894.25 cost of production. Anyway, the question is not cost of production. The question is known as office administration expense only. That's it. Anyway, the question is office and admin overheads. That is equal to rupees 28,894.25. That's it. So 20,894.25 is equal to office and admin overheads. That's it. The question is that's it. Go to the cost sheet and refer factory cost, office cost of production. That's it. The question only office admin expenses. That's it. So 28,894.25. Let's see. So gross factory cost is given 58,000. So gross factory cost is equal to given 58,000. Okay. From this add opening WAP, opening work in progress, less closing work in progress. That is equal to net factory cost. See the gross factory cost onwards. I told you a format. So gross factory cost plus opening WAP minus closing WAP equal net factory cost. Net factory cost. Go and refer net factory cost. So net factory cost is equal to, okay, that is equal to 54,000. 54,000 net factory cost given. Gross factory cost 58. Net factory cost rupees 54. Opening WAP 8,000. 8,000. Closing WAP question mark. 58 plus 8, 64. 66. 50 plus 8 is 66. 66 minus what? 54. 58,000. 58,000 plus 8,000 minus 54,000. 12,000 is equal to closing WAP. Please check it out. Balancing figure. 58 plus 8 is 66. 66 minus 12 is 54. Anyway, the question is closing WAP, closing work in progress. So that is equal to rupees 12,000. That is equal to closing WAP. That's it. 66 minus 12, 54,000. So closing WAP rupees 12,000. That's it. Prime cost to 41,000. Direct labor cost consists of skilled labor 6,000, unskilled labor 2,000. There are two direct labor costs. Variable overheads 100% of direct overheads, direct wages. Fixed overhead is 60% of direct wages. So sale of scrap 1,800. Maybe this scrap there are two types. Either maybe material or it may be related to factory. So assumption only. Here you can assume the sale of scrap related to factory related. Make it sure. So factory related. The 1,800 is going to be factory related. Assumption only. I may not know. Scrap may be raw material. Scrap may be factory related. This is factory related scrap. Right. Find the work cost. That's a question. Okay. You must know direct material. Before prime cost, you must know direct material. So direct labor. So direct expenses is equal to prime cost. Okay. So prime cost 41,000 given. Direct labor, two things. Direct labor. Skilled 6,000 salary plus unskilled we paid salary 2,000. So overall we paid 8,000 we paid. Skilled 6, 2,000 unskilled labor 8,000. Direct material not given. That expense not given. No problem. Anyway, not given. No problem. Leave it. So leave the point. So anyway, the one point is given that you get. Direct labor is given. Okay. The point we fixed. See, after direct labor only prime cost will come. Okay. Right. Next, factory overheads. Factory overheads. There are two things. Variable overheads and fixed overheads. Variable overheads and fixed overheads. So variable overheads 100% direct wages. So variable overheads 100%, 8,000 into 100%. Variable overhead 8,000 100%. Okay, variable overheads. Direct wages is 8,000. Direct wages in 100% variable overheads. What is variable? The more the output you produced and sold, the more expenses will happen. It's called variable. So more output, more material, more labor, variable. What is fixed? Whether you're producing or not, rent you have to pay always. Fixed salary you have to pay always. Say I'm not producing 0 today. Fixed rent you have to pay. I'm producing 1 lakh units, rent you have to pay. That's it. 8,000 100%. 8,000 100% is nothing but 8,000. Fixed overheads. What is fixed overhead? Fixed salary you have to pay. Fixed rent you have to pay. Whether you're producing or not, you have to pay fixed overheads. 60% direct wages. Direct wages 8,000. So 8,000 into 60%. 60% is nothing but 4,800. 4,800. That's called fixed overheads. Minus scrap. Scrap in the factory is a revenue. Scrap is a revenue. Scrap sale is a revenue. So 1,800 is a revenue. Subtract. Balance sheet show. So Scrap of sale is a revenue, not a cost, revenue in factory, 8,000 plus 4,800 minus 1,800. That's it. Anyway, 11,000. So 11,000 is equal to factory overheads. That's it. 41 plus 11, 52. 41 plus 11 is equal to 52. 52,000, nothing but work cost. Sum over 50,000 work cost. 50,000 work cost. That's it. Let's see. From the information, prepare a statement showing expenses which you would disregard in estimating cost. So what are the elements which is not part of a cost? Not a cost. Disregard means not a part of cost. Rent, trade, insurance, off is a part of cost. You want to say part of cost. So what is part of cost? What is not part of cost? Disregard, not part of cost. Or disregard cost. Disregard. It is not a cost. Disregard. Right? Or not part of cost. Rent 2,500 is a part of cost. Office expenses, office overheads. But check it out, it's going to be office overheads. Right? Please check it, office overheads. Right. So next one. Any bad debts? Sorry, there are two opinions. Now we can take it's not a part of cost. Rupees 200. There are some people it's not part of cost. Bad debts. Discount allowed. I told you there are some people used to say it is not part of cost. You can assume it is not a part of cost. 300. 300. Next one. Similarly, next one. Bank charges. Bank charge means office related expenses. Maybe. So bank charges, office related expenses. You can put it here. Office related expenses. You can put it here. Donations, not part of cost. Donations. Rupees 150. So please add 200 plus 300, 500 plus 150, 650. 650, not part of cost sheet. Not part of cost of this unit. This is part of cost. 2,600 is a cost. So part of cost. It is not a part of cost. 650. Not. The question is, what is not disregarding in the estimating cost? This is. So totally you can disregard cost. How much? 650. You can disregard 650. That's it. Prime cost 50,000. Direct labor 71 prime cost. Find the direct material. Right. So direct material plus direct labor is equal to prime cost. So prime cost is given 50,000. Given 50,000. Direct labor 70% prime cost. So 70% of prime cost. What is prime cost? 50. Direct labor 70% of fixed cost. Sorry, prime cost. Direct labor 70% of prime cost. That's what given. 70% prime cost, direct labor. 50,000 70% is going to be 35,000. 50,000 70%, 35,000. And the balance 15,000. Balance 15,000 direct material. So balance 15,000. So balance 15,000 direct material. That's it. Completed. Anyway, direct material cost rupees 15,000. Rupees 15,000. That's a question. Direct material cost rupees 15,000. That's it. Balancing figure. 50 minus 35 reverse working. 50 minus 35 15. 50 minus 35 15. Direct material cost is 15. That's it. Question direct material. You must know the format first well. Cost sheet. Direct material cost is 80,000. Direct labor cost is 60,000. Factory overheads is 90,000. Beginning goods in process. WAP. Opening WAP 15,000. Cost of goods manufactured 2,45,000. What is the cost assigned to ending goods in process? Closing WAP question mark. What is the cost assigned to the ending goods in process? Closing WAP question mark. That's it. So everything is given. Okay. Normal route will do. Normal route. So direct material 80,000. Normal route. Closing WAP is a question mark. So direct labor 60,000. So direct expenses. Sorry, not given. Then here prime cost 80 plus 60 1,40,000 prime cost plus factory related overheads. 90,000. Add. You'll be getting gross factory cost. gross factory cost. 1 lakh 40 plus 90, 2 lakh 30. 1 lakh 40 plus 90, 2 lakh 30. 2 lakh 30. Plus add opening work in progress. Let's say closing WAP. Let's say closing WAP. Closing WAP. Answer net factory cost. Net factory cost. That's it. Here net factory cost is equal to goods manufacturing cost. Net factory cost is equal to manufacturing cost here. Manufacturing cost here. Here it is going to be manufacturing cost. That's it. Anyway, net factory cost equal to manufacturing cost. Okay. What is net manufacturing cost here? So 2,45,000. 2,45,000 net manufacturing cost. So net manufacturing cost it is going to be so 2,45,000. That's it. So closing WAP. Sorry, no idea. No idea. Question mark. Opening beginning goods in process. Beginning goods in process. Process opening work in progress. Beginning goods in process 15,000. 15,000. 15,000. Closing WAP question mark. Question mark. So 2,45,000 minus 2,30,000 minus 15,000 is going to be 0, 0, 0. So closing WAP is 0. 2,30,000 plus 15, 2,45,000. 2,45,000 minus 0, 2,45,000. Therefore, closing WAP nothing available. Everything we have produced, nothing is closing WAP. Nothing is closing WAP. Anyway, nothing is closing WAP. So closing work in progress is equal to rupees 0, rupees 0. So closing work in progress is equal to rupees 0, rupees 0. Given the data, finished goods opening inventory given, opening FG is given, opening finished goods given. Okay. Next, closing FG is given. So closing FG is given. Opening FG 30,000. So closing FG 50,000. 50,000. Opening FG plus opening FG minus closing FG is equal to cost of goods sold. That is 1,90,000. Then what is missing? Cost of production missing. Cost of production missing. COP missing. Our cost of production is here. Cost of production is missing. That's it. That's it. Reverse working. 1,90,000 plus 50 minus 30. Reverse. Reverse. If minus reverse means plus. Plus. 1,90,000. Reverse. Reverse working. Minus plus 50. Minus 30. Minus 30. Answer 2,10,000. Answer 2,00,000. Can you check it out now? Can you check it out? Reverse working. 2,10,000 plus 30 minus 50. 1,90,000. 2,10,000 plus 30. 2,40,000. 2,40,000 minus 50. 1,90,000. That's it. Or we can say X equal to COP. X equal to COP. X cost of production plus 30,000 opening WAP minus 50,000 closing WAP. That is equal to 1,90,000 COGS. That also you can do. See mathematics only, pure mathematical numbers. That's it. So closing FG, then COGS. What is X? Minus 20, 30 minus 50 minus 20, 1,90,000 plus minus 20. Right answer will become plus 20, minus 20. When it comes to right answer, plus 20, plus 20, minus 20, plus 20 will come. So X equal to 2,10,000. That is equal to cost of production. That is equal to cost of production. That is equal to cost of production. That's it. That's it. So cost of production. That's it. Okay. So the question is cost of production. COP rupees 2,10,000. That's called cost of production. Right. Prepare a statement of cost from the following data. Show material consumed, prime cost, factory cost, cost of goods sold, and profit. Breakup. Entire cost you have to break up into prime cost, cost, material consumed, factory cost, cost of goods sold, profit. What are the data given? 115 is called opening. 115 is called opening. 31, 12, 15 is called closing. So opening RM, closing RM, opening WAP, closing WAP, opening finished goods, closing finished goods, data given. Opening raw material 60, closing raw material 50, opening WAP 25,000, closing work in progress 30,000, opening FG 1,20,000, closing FG 1,10,000. Purchase of material during the year 9 lakhs. 9 lakhs. Material purchase during the year 9 lakhs. Part of material. Wages paid. Wages paid. Direct wages. Direct wages 5 lakhs. Factory overheads 2 lakhs. Admin overheads 50,000. Selling distribution overheads 30,000. Sales 20 lakhs. Question is material consumed, prime cost, factory cost, cost of goods sold, and profit. Can you go to the proper cost sheet? We'll go to the proper cost sheet. Cost sheet. So first one, direct material consumed. that is equal to opening raw material plus purchased raw material plus carriage inward raw material minus closing raw material. If there is any sale of scrap available, you can do it. Okay, you can do it. Raw material sale of scrap, normal loss, you can do it. In opening raw material 60,000. Opening raw material 60,000. Please make it take. Please make it take. Opening raw material plus 60,000. Closing raw material 50,000 minus 50. Closing raw material minus 50,000. Purchased raw material 9 lakhs. Purchased raw material 9 lakhs. 9 lakhs. Carry not given, not given, not given. That's it. So 60,000 plus 9 lakhs minus 50,000. That's it. 9 lakh 10,000 direct material consumed. Okay. Number one, direct material consumed. Number two, direct labor. Labor is given. That's called wages. Wages is given 5 lakhs. Direct wages given 5 lakhs. 5 lakhs. 5 lakhs. Number three, is there any direct expenses? Sorry, sir, not given. Sorry, sir, not given. Dash. Is there any direct expenses? Sorry, sir, not given. That's it. Answer, prime cost. Prime cost. Answer, prime cost. 9 lakh 10 plus 5 lakhs, 14 lakh 10,000. 14 lakh 10,000. 9 lakh 10 plus 5 lakhs, 14 lakh 10,000. Prime cost work plus factory. Finally, we'll do. We have to do, but finally we'll do. Okay. Factory related expense available. Please check it out. Factory. So later on we can take WP. Not now. Later on we'll take. Okay. Right. Now we'll take a factory. Factory. Okay. Factory. Later on, after factory, we'll take WP. After factory, but okay, there is no process, but we'll do. After factory, we'll take WP. Factory overhead is 2 lakhs. So factory overhead is 2 lakhs. Okay. The term is called gross. I think there's no fixed format, but we are doing. Okay. Right. So gross factory. That's called gross factory cost. 14 lakh 10 plus 2 lakhs. 16 lakh 10,000 gross factory cost. 14 lakh 10,000 plus 2 lakhs. 16 lakh 10,000 gross factory cost. So gross factory cost. Okay. After gross factory cost, add opening work in progress minus closing work in progress. That's it. So opening work in progress. Now you can select 24. Closing in progress 30 plus 24 minus 30. Opening work in progress 24, closing WIP 30. So plus 24. Plus 24 minus 30. Plus 24 minus 30. That's completed. Okay. So then the result is called net factory cost. The result is called net factory cost. Net factory cost. So 16 lakh 10,000 plus 24 minus 30 is called 16 lakh 4,000. 16 lakh 4,000 minus 16 lakh 10 minus 6 16 lakh 4,000. So net factory cost 16 lakh 4,000. Please check it out. Plus 24 minus 30 16 lakh 4,000. So after net factory cost, okay. Then add office and administration expenses. Add office and admin overheads. Office and administrative overheads here is going to be 50,000. 50,000. Office and administrative overheads 50,000. Please make it 50,000. 50,000. That's it. So add office administrative overheads. Add. The result is called sellings are not available now. You can straight away say selling is also there. Okay. If anyway, selling is there. So anyway, cost of production. And opening FG, closing FG also there. Okay. 16 lakh 4,000 plus 50,000 plus 50,000. 16 lakh 4,000 plus 50,000 is going to be 16 lakh. So 16 lakh 54,000 cost of production. That's it. So with this, add opening FG. With this, subtract closing FG. So opening FG 1,20,000. Opening FG 1,20,000. Closing FG 1,10,000. Opening FG 1,20,000. 1,20,000 opening FG. Closing FG 1,10,000. Closing FG 1,10,000. 1,10,000. That's it. Opening FG 1,20,000 minus closing FG 1,10,000 plus 1,20,000 minus 1,10,000 plus 1,20,000 minus 1,10,000. That's it. We'll do cost of production plus opening FG minus closing FG. Right. 1654,000 1654,000 plus 1,20,000 minus 1,10,000. That's it. It's going to be, please check it out, 16,64,000 I think. 16,64,000 I think. Right. It is called cost of goods sold. Stage by stage we are doing. Okay. There is a opening FG, closing FG is given. Finished goods opening, finished goods closing given. So cost of goods sold COGS. With this COGS had selling overheads, selling and distribution overheads. So selling and distribution overheads 30,000, 30,000, 30,000 selling and distribution overheads 30,000. Please add selling and distribution overheads 30,000. Please add. So you will be getting 16,64 plus 30. So 16,94,000. That's it. It is called so cost of sale, cost of sale, cost of sale. 16,000 plus say profit, profit plus profit is equal to sales, sales. So sales 20 lakhs, sales 20 lakhs. So sales 20 lakhs. That's it. Sales 20 lakhs. Sales 20 lakhs. Sales 20 lakhs. That's it. Okay. So 20 lakhs minus 1694,000. So 3,06,000. Profit 3,06,000. Profit 3,06,000. That's it. So profit 3,06,000. It's a profit. That's it. So entire cost sheet is over. That's it. How to find cost sheet, sir? How to find profit, sir? Balance sheet figure. Sale given 20 lakhs. Cost of sale we arrived at. Sale given. Sale minus cost of sale profit. Balance sheet figure. 20 lakhs minus 16,94,000. 3,06,000 profit. That's it. Now cost sheet is over. Now whatever the question they're asking you, you have to find out. You have to find out. What are the question they're asking one by one? First question. Material consumed they're asking you. Material consumed they're asking you. Yes. Show. Material consumed they're asking you. In a material consumed it is going to be 9,10,000. 9,10,000. Okay. So 9,10,000 material consumed. Yes, I shown separately. Right. Otherwise you write it. Otherwise you write it. So they want to show separately. No, you write it. You write it. Write it. So material consumed. Consumed. So prime cost. Factory cost. Cost of goods sold. And profit. And profit. Okay. First one material consumed. 9,10,000. 9,10,000. So material consumed equal to 9,10,000. Please check it out. Please check it out. 9,10,000 material consumed. So rupees 9,10,000 material consumed. Okay. Number 2, prime cost. 14,10,000 prime cost. So 14,10,000 prime cost. Number 3, factory cost means always net factory cost. Factory cost means always net factory cost. So prime cost 14,10,000. Yes. Factory cost means always net factory cost. Always net factory cost. Net factory cost here 16,04,000. 16,04,000 rupees. 16,04,000 net factory cost. 16,04,000. 16,04,000 net factory cost. 16,04,000 net factory cost. So cost of goods sold 16,04,000 net factory cost. Net factory cost. Cost of goods sold. Cost of goods sold rupees 16,64,000 I think. So cost of goods sold 16,64,000. 16,64,000. Cost of goods sold 16,64,000. Right. 16,64,000. Right. Last one profit. Profit 3,06,000. Cost of goods sold 16,64,000. Profit Profit 3,06,000. Profit 3,06,000. So 3,06,000 profit. So 3,06,000 profit. So they're asking you 5 questions. 5 questions is over. 5 questions over. That's it. So middle consumed 9,10,000. Please check it out one more time. 9,10,000. Prime cost is 16,04,000. Yes. Prime cost, sorry. Prime cost 14,10,000. Prime cost 14,10,000. 14,10,000. Please check it out. Correct. Net factory cost 16,04,000. 16,04,000. Yes. Cost of goods sold 16,64,000. 16,64,000. Yes. So profit 3,06,000. Profit 3,06,000. That's it. Subscribe to our YouTube channel Stride Edutech and press the bell icon to see new videos.